Kirloskar oil. Just before we get to the numbers, it's one of the top gainers today, of course. Kush, are you looking at this on the charts? Of course, massive run up. Would this be a key for profit booking right now? Just a view on the levels on Kirloskar oil.
Oh, absolutely. Time to book profits. I mean, it's popped up on the list after a while now, since you mentioned. Now it's coming at a supply zone. If you see, 830 to about 870 is where, there is some congestion. Right now, it's bang in the middle of that range. You could see some profit booking. But I typically like to play momentum, via either a trailing stop loss or, booking partial profit. So I would just book partial profit and hold the rest with a stop loss around the 825 mark, because if you get this kind of momentum and there is a follow through, then you might miss out on another about 3 to 5% of gains, if not more.
This is something that you've looked at the numbers for, Samit. You've looked at the numbers for Kirloskar oil very closely, and they seem to be quite a bumper.
Yeah, there are multiple reasons. Firstly, the stock was an underperformer, and what they have reported in fourth quarter is a very strong set of numbers. It is a beat on all fronts. If you look at the revenue, it's an 8% beat. EBITDA is 10% ahead of what the street was estimating, and net profit, the reported net profit is a 26% beat. But there's a one-off of around 21 odd crore rupees, or around not 21 odd crore rupees. It's around 2-3 odd crore rupees. But if you remove even that exceptional gain that they had, the net profit number is still a beat of around 10 to 11 odd percent. So what happened in this fourth quarter? The company's revenue grew nearly 2% on a YY basis. Now, this growth number might look small, but do remember that fourth quarter last year was a very high base number. Despite that, the company has reported a growth in the fourth quarter numbers. The B2B segment was broadly flat, but the B2C revenues grew nearly 15%. EBITDA came in at 170 crore rupees as against analyst estimates of 160, and B2C segment profitability has started to improve. Last year, this number, or the B2C segment margins, were at close to 5.2%, and now this number stands at around 11%, which means that margins have nearly doubled for the B2C segment. Net profit, adjusted net profit increased around 8%, again a beat also compared to what the street was estimating. And why this Q4 numbers were important is because last year, if you remember, there was a pre-buying action that was seen because of the CPCBO, that is the generator transition that had implemented from FY25. There was a pre-buying activity that we had seen in the fourth quarter. Hence the street was expecting that this year number would be a decline, but despite that, we have seen a growth. Also, if you look at the cash flow situation of the company, that has improved. For operating cash flow has increased by nearly 13%, while the free cash flow has increased by nearly 17%. So overall, a strong set of numbers coming after an underperformance in the share prices that we have seen, and that's the reason why the stock is up 17% in trade.
What a mover this has been today. Samit, thanks for putting all of that into perspective. Dharmesh Kant, Head of Equity Research at Chola Securities, also joins in on the show. Dharmesh, I'm going to start with the micro first, since we were talking about Kirloskar oil, Petronet LNG, a possible large deal coming up in Nuvama. Thank you for joining in. Do you track any of these businesses? Did you have a chance to look at the Kirloskar oil results, for example?
Yeah, good afternoon, Neeraj. I mean, today is such a hectic and busy day. So I did not have a chance to look at those numbers in detail, so difficult for me to comment. And the other deal also, which is there for the Nuvama front, so haven't studied that very closely.
What have you been busy buying in this hectic day?
Yeah, it was automobile stocks,